Which is the best stock to buy, Roku or Netflix? I'm going to answer that question in this video, so you're not going to want to miss that. It's actually might be a little surprising what the answer is, so I don't think you're going to want to miss that. Stay tuned. I'm going to compare these two stocks across 4 financial metrics, and at the end, I'll answer the question which one is the best stock to buy. So let's get started looking at revenue growth. Roku significantly outperformed Netflix in terms of revenue growth for the last 5 years. Look at this spread here from Roku compared to Netflix. However, both of them have been moving in the wrong direction here, decelerating revenue growth. They're still growing revenue, however, that growth is slowing. Some of that is to be understood because each of these companies benefited because of the outbreak, right? Spending more time at home, demand for streaming content absolutely soared. We wanted more stuff to watch. We wanted more stuff that we could do in the safety of our homes when COVID-19 was first emerging and the threat was unknown and it was really scary, and so people were spending a lot of time at home. Really good circumstances for Roku and Netflix. Revenue, profits, everything exploded. Customer signups, everything was really good. Now they're experiencing the headwind from that impact, right? So now it's the opposite. People want to get out of their homes. They're looking for entertainment options away from home, and they're spending more time and money on those instead of spending more time and money indoors. So now it's the reversal of that trend. However, as you could see here, they're not experiencing negative revenue, right? So that's the good news. Even though people are getting out of their homes, spending more time and money away from home, Roku and Netflix are still growing revenue 13% and 6.46% in their most recent year. And then even last year, the year before that, still growing revenue. So despite these changes in consumer habits, Roku and Netflix were able to keep the majority of the customers that they attracted during the pandemic. That's good news for both of them, actually. That's really good news for Roku and Netflix. So the next thing I wanted to compare these two companies on is cash flow from operations to sales over the trailing 12-month period going back several years to 2018. So according to this metric, Roku was in the lead here 2018, 2019, 2020. And then in 2021, Netflix really improved in this metric, and now their cash flow from operations to sales at 6.41% is way ahead of Roku at 0.38%. As Roku moved downward, Netflix has reaccelerated upward. And this metric is important to me because it measures how good a company is at turning sales into cash flow from operations. I like to see a higher number in this metric because I want to see sales turn into cash. It's easier to get sales if you're spending a lot to capture those sales, right? A lot of money on, let's say, sales and marketing, a lot of money on hiring staff, a lot of money on research and development. All of that can improve your sales, but at the cost of your cash flow, right? You're spending money to achieve those sales, and so the more you do that, the lower this margin is. So I like to see companies be effective in their use of cash and therefore deliver greater leverage with every dollar of cash they spend. So when I see this, what this tells me is that Netflix is getting really good at their spending. And what does Netflix spend the majority of their money on? Content, right? They spend their money on content, whether they're licensing it from other studios or whether they're creating it themselves. So what this is showing me is that Netflix is getting better and better and better at spending money on content. They're getting better at learning what their audience wants, and they're getting better at producing that kind of content with lower spending. And so over the years, they've done a good job with their learning curve, and this is showing up in their cash flow from operations to sales. The next metric I wanted to look at is the operating profit margin over the trailing 12 months, going all the way back as much data as I can get. I could get 10 years for Netflix, but I could only get 5 years or so for Roku. And looking at this metric again, Netflix impresses, showing you the improvement over that time, going from close to zero all the way up to 17.82% in its operating profit margin, although it is trending downward since the economic reopening gained momentum. Roku was doing an excellent job in this metric, and then the economic reopening really hurt Roku. It really hurt Roku in two ways. First, I mentioned already that consumer behavior shifted. People started spending more time away from home, so that was one downside to Roku. The other downside is that the economic reopening caused inflation to surge higher. Inflation surged higher, and so Roku was forced to pay higher prices for its units, for its players that captures customer growth, and management chose to absorb those costs instead of increase prices on customers, and that 1-2 punch caused a big downward trend in its operating profit margin. So Roku has been really hurt from this economic reopening. So finally, I wanted to look at their valuations, and I chose to use the forward price to sales ratio. And according to this metric, Netflix is trading at a forward price to sales of 3.78, which is more expensive than Roku at 2.287. Now they flipped, right? Earlier in 2022, Roku was more expensive according to this metric. Now Netflix is more expensive according to this metric, as Roku has just continued to decrease in terms of its valuation. Netflix has bottomed out and started increasing in terms of its valuation because the market has started to realize that Netflix is now again returning to subscriber growth, and they didn't lose as many subscribers as the market feared they would, and that's causing a bid and demand for Netflix stock. So if I was to pick one of these two stocks, which one is the best one to buy right now, I would say I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would say Netflix is the best one to buy. The company is doing better longer term, getting better at spending money on content. Its operating profit margin is increasing, and all of that money that they already spent on content is on its platform now. That's going to attract customers for years and maybe decades, right? They've already spent money for 5 years or 4 years of Stranger Things. That's on the platform. That's going to continue attracting new customers that have not yet watched that, and arguably it's one of their best shows. And they've got others, right? Bridgerton, House of Cards, and many more that they've already spent money on that have shown that they were really popular and customers really liked it. So there are still new customers that have not seen that yet, that have not signed up to Netflix yet, that they can continue coming on, and that older content that they've already spent money on will continue attracting customers for several years. All right, so Netflix is my favorite one to buy out of these two, and that's all I've got for this video. Thank you so much for watching. I've selected a few videos that are popping up on your screen right now that I think you're going to enjoy. So click on one of those and I'll see you over there.